You know, the funny part about being an American citizen is we have tremendous value and tremendous rights. Everything from starting a business, making investments, freedom of speech, everything. We have been given all kinds of political direction and congressional passing of laws and IRS rules, and everything we have has been a construction over the last 250 years that tells us what we need to do to build wealth and independence as an American citizen. But you know, there is a better way to play the game of Monopoly, and that is maybe go back and understand the creator of the game Monopoly and what his intentions were, or their intentions were. In the case of the federal government, government is like an insatiable appetite. It's like bacteria. It never goes away. It just alters and changes its form. But by the time you're done, the bacteria exposure has grown bigger and bigger. We've never had a larger government. We never had larger numbers, larger deficits. We've never had anything greater than what we see today. It's going to be bigger in 10 or 20 years, by the way. So don't be alarmed by the fact it's going to go up, not down. But one thing that's very certain to me is that we have all been playing a game and we never really understood the rules. And the rules were not what was written. The rules have been about what was intended. What was intended, starting at the baby boomers beginning in 1946, we came out of World War II and they said, look, we have this huge amount of population explosion. From 1946 to 1964, today there's 70 to 72 million people over the age of 62 that are consumers of all the social services and retirement and Medicare and Medicaid and insurance and healthcare and medical services. It's an enormous drain on the economy. So what the IRS figured, as they watched the baby boomer evolution evolve, I'm the last year of the baby boomers, 1964, they said, look, we got 90 million people born in a 20-year period. It almost quadruple the population of the United States. Actuaries got in there and calculated, based on the size of that population growth, what we're going to see is some of the largest people and crowd and consumers of social service we've ever experienced, or can't even calibrate or calculate. We're not going to have enough taken out in Social Security. We're not going to have enough in service. We're not going to have enough in the budget to satisfy all the needs that this 90 million baby boomers are going to want. We got to hope for a couple things. We got to hope they die sooner and die earlier. We got to hope that they can save their own money, that maybe there'll be less of a burden on the system. And we got to figure out how to make them take that money out of their IRAs and retirement accounts so we get a chance to tax that money to generate the future tax income to the government to satisfy the drain on the government and the economy by these baby boomers. So what'd they do? They convinced us that you're almost un-American if you don't set up your own IRA. You're almost un-American if you don't contribute to your 401k and your retirement plan. Not a bad investment, actually. It's a very good investment. You put a little money in that earns and grows tax-free. You do it every year, 30, 40 years. If you invested smartly, you have great returns or even decent returns, you have a compound effect that really can't be measured. Investing in retirement is a great thing. But they forgot to give you the back half of the game. They forgot to go back and say the inventor of the game Monopoly had an end game in mind. The end game in mind is what? Own all the assets and keep all the money. Be the bank. Well, the federal government is the bank. They always win. They tax you when you're born. They tax you when you make income. They tax you when you sell assets. They tax you for automobile and gas and fuel and purchases and consumer goods and sales tax and state. They tax us every time we take a breath of air. But the one thing that the government was counting on, that the baby boomer generation was driven by greed and happiness and a lifestyle no one could ever dream. They came out of a depression. They came out of 2 wars, and they said, look, it's yours to have. Get busy, work hard, make companies, grow the country, grow the economy, and put all the money you can in your retirement account because that's going to make you independently wealthy. Out of the 70 to 72 million baby boomers alive today, about 18 to 20 million of them have a current net worth of about $45 trillion. Today in self-directed IRAs is about $900 billion sitting in self-directed IRAs. So between traditional retirement accounts, self-directed IRAs, 401ks, KIOs, etc., what you have is you have an enormous treasure chest for the IRS and the federal government. And what they're saying is you have a mandatory withdrawal. We've created this runway that's just wide open space from 1946 to 2026. You need to run hard, run fast, put all the cash in cash. Don't touch it. Don't spend it. Just invest in assets that makes it grow like bacteria. Grow in your account. Grow all the money you can grow tax-free. But there's going to be a day of reckoning, and that day of reckoning is simply this. When you reach a mandatory withdrawal, if you're not smart enough to do it ahead of time, you're going to be forced to take money out at the tax rate at the time of the withdrawal, and it's taxed on not only the growth, but the money that you put in to start that retirement account in the first place. So what I've experienced from 3,000 of my partners over the last 8 or 9 years is they figured out the best way to do a conversion and minimize or avoid the tax altogether is find assets that you can acquire inside of your self-directed IRA or inside of your 401k that will allow you to transfer those assets with the least amount of taxes owed on the growth and the principal invested inside that retirement account the last 40 years. The problem is there's virtually zero investments that allow you to do that with any significant impact. Now, what we figured out is oil and gas mineral rights allow you to do that. It's a subject, it's an asset class, it's an investment that makes sense if you have the time and energy and you consult with your financial advisor or your CPA who probably know nothing about it, but if you take the time to pursue it, it is an outstanding asset class that provides you the tools to follow the guidelines of the IRS, follow the guidelines of what you need to do to create wealth for yourself and avoid paying any more tax than you have to upon exiting your traditional retirement account and taking it out as a mandatory withdrawal, or at least as you need it throughout the rest of your life. Let me tell you, folks, the IRS, the government, those actuaries behind the tables 20, 30, 50 years ago, they knew exactly what they were doing. They herded us all up. They put us into a corral and said, grow, 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 kind of like a feedlot. And we ate and we built money and we built assets. And we have $80 trillion of assets. They want us to hurry up and transfer to our heirs. And they want to tax us somewhere between ordinary income tax, today at 37%, all the way up to estate tax at 50, 55%. If I let you grow your assets and I take half of it to 1/3 of it back, you essentially work the last 1/3 of your career for free, and you're giving back 1/3 of your gains inside of your IRA to the federal government taxes. It should be the number one thing on your list to pay attention to seek solutions to, and to figure out how you prevent the government and the IRS from getting money that you worked an entire career to keep. Thanks for listening to me.